Yeah, if we look at the 4-year cycle, that's indeed the case, right? So so there's still time is on our side. I mean, we still literally we can go sideways for another 6 months, and we would still be on track in the 4-year cycle. And but I think after the summer, we might see another all-time high, and that will serve as this confirmation, like, oh, it's not done, and I think people will get optimistic again.
The Rational Root, a popular Bitcoin on-chain and cycle analyst, shares his extremely bullish outlook on Bitcoin, backed by charts that prove its future positive performance. In his latest forecast, he reaffirms that Bitcoin follows a 4-year cycle and notes that the current market can go sideways for another 6 months without deviating from this cycle. With this, he expects a new all-time high just right after the summer, which would renew optimism in the market. We know that recently, there have been substantial outflows from Bitcoin ETFs, primarily driven by retail investors rather than institutions. However, despite these outflows, he remains optimistic due to the overall growth rate of ETF inflows, which still significantly exceeds the new supply issuance of Bitcoin. In another news article, Cointelegraph states that despite the current price movement of Bitcoin, traders are expressing their optimism. The article discusses the current state of Bitcoin's market, the price drop, and traders' reactions. As of July 4th, Bitcoin's price declined, falling by 3.34% in the last 24 hours and 5.82% over the past week. The price reached a 1-month low of $56,709, dropping below the crucial $60,000 support level. This decline has affected the overall crypto market, which saw a 4.23% decrease in total market capitalization to $2.13 trillion, and a significant increase in trading volume, indicating intense sell-off activity. However, analysts point out that Bitcoin's current 22% pullback, lasting approximately 45 days, is slightly above average but not unusual. They note that retesting the 200-day EMA has historically indicated a bottom range. This suggests a potential setup for a significant upward breakout. This is supported by the Wyckoff reaccumulation method, which suggests that the current correction might lead to a substantial price increase. In other words, hold on, because there is a high chance for Bitcoin to bounce back up in just a short amount of time. That said, let's look at some clips from the Rational Roots interview. Please take a moment to show your support by liking the video and subscribing to the channel. Thanks, and enjoy the video.
If we look at ETF flows, we have now seen some more substantial outflows, and we have to realize, okay, actually the ETF flows were 80% retail, 20% institutions, and so obviously they're also affected by the market dynamics, right? So, so if the Bitcoin price doesn't do well, we will also see outflows in those ETFs, and we have seen 2,000 Bitcoin per day outflows in the last weeks a bit, and but it's again stabilizing a little bit. So I still remain optimistic because if we maybe go to the next chart, we can actually see the growth rate of those ETFs, because I still think the ETFs are a really important driver of the bull market, so we see actually that we are at 2.1 K average flows, the average flow, the average inflow. And so that is still 4 times as much as the new supply issuance, right?
Yeah, so since the halving, because the 2.1K average per day since they launched is great, but apart from that recent spike, it seems a little bit more neutral.
Yeah, so we had a lot of initial flows, and we actually got to an average of 4K Bitcoin per day in that beginning. But obviously, this is very little data, and so now that has trended down to 2K per day. And it could even trend lower. I mean, even we can go to 1,000 Bitcoin per day. That wouldn't be out of the ordinary. But I still think we will remain above the supply issuance, which is only 450 Bitcoin per day.
But what about the futures market in that? Because Checkmate talks a lot about the cash and carry trade, where they're just shorting on the futures market.
Yeah. So I don't look at as much on futures as Checkmate does, but the cash and carry trade, because we have this because there's a 10% spread or so, or there was, it's already less now. People are incentivized. It's literally the arbitrage to get the futures market to get to the same spot price of Bitcoin. And so the cash and carry trade, it works for a while, but then the price obviously gets more similar to the spot price, and so the spread becomes smaller. But people want to capture that spread. And so therefore they do this cash and carry trade. But in reality, this effect is relatively neutral on the markets. I don't see the futures market. Obviously, I mean, you can, there is the discussion of paper Bitcoin on in the futures market with USD, you can basically gamble on Bitcoin, right? You can either short or go long without any underlying real Bitcoin, and so that could be seen as paper Bitcoin on top of Bitcoin. But overall, I think that is still it's the size is not that big at the moment. At times it's a little bigger than at other times, obviously, and it has more of an effect. And we actually recently had this 10% spread, between the futures price and the Bitcoin spot price. And so, that at those moments, it has a bit more effect. But once that closes, we're back to just the normal market dynamics.
While futures trading, including paper Bitcoin, can impact the market, the Rational Root believes its effect is relatively neutral overall. Initially, ETF inflows were high, averaging around 4,000 Bitcoin daily, but have since stabilized at around 2,000. Even if this average inflow decreases to 1,000 Bitcoin per day, it would still be above the new supply issuance, supporting market growth. He also discusses the cash and carry trade, where investors exploit the spread between the futures price and the spot price of Bitcoin. This trade is an arbitrage strategy that eventually narrows the spread between the futures and spot prices. So, while various dynamics are at play, the Rational Root concludes that the 4-year cycle remains a stable and reliable pattern. He expects continued growth and stability in the Bitcoin market, supported by ETF inflows and other positive factors. Now, let's get back to the Rational Root's interview.
Yeah, what I wanted to get into now was the Bitcoin cycles, because I think it's a good idea to explain a bit more. I've looked into these cycles probably more than anybody, and so I aligned them here just to have an overview. But basically, we go from most optimistic alignment to most conservative alignment. So from previous all-time high to halving cycle to 4-year cycle, and so from optimistic to more conservative. But then I wanted to go through these one by one. Because obviously we had a new all-time high, and in the past, when we reached an all-time high, we always had a bull market. It was always followed by a bull market. And so the problem with cycle analysis, so Bitcoin moves in these cycles, and it's really cool to compare these cycles, but what is the best alignment, right? So we can basically take any arbitrary point in time and try to align them. And so the question is, what is the best alignment? What should we do there? And so historically, as I said, so when we would get an all-time high, it would be followed by a bull market. And so it makes sense that once you reach the all-time high, to then look at the cycles starting from that all-time high position. But this time, as I said, we had a muted top in 2021. And so, we made this all-time high due to this ETF catalyst, but we're actually 6 months early, at least in the 4-year cycle. And so in this particular case, it is clear that the alignment from previous all-time high is not the best alignment, because if you look at the red line there, which is the current cycle, we already fell below all of the other cycle, and we've basically been consolidating for a long time. And so it was also clear to me, because I also thought when we got that first all-time high that we could get a real continuation of the bull market, but then the flow stopped, which why I was tracking the flows. And we saw this consolidation appear. And then when it started taking a little longer, I already informed my followers, okay, this is not the best chart to be looking at, because it seems we're gonna this is gonna take a long time, and it's not the best alignment currently. And so in our last show, we also talked about the ETF approval and the halving cycle. So basically, because this cycle, the ETF was a bigger catalyst than the halving, we could also choose to align the cycles by the halving for all previous cycles, but then for this cycle, take the ETF approval, and then we got that image that you see there. So the ETF approval plus halving cycle alignment, and we're still more or less on track there. But yeah, I still think that maybe the 4-year cycle is still the best alignment to look at momentarily. And so the next alignment is actually the halving cycle. And so we just take the halvings for each cycle, which is a very famous alignment that I'm sure most have seen on Twitter. But in the 4-year cycle, we really can see that all bull markets align. And the cool thing about the 4-year cycle is also that it incorporates a bit of seasonality. So, because the summers fall in the same place, and so you get the seasonality in there as well. And therefore, I think the 4-year cycle, also the last cycle in 2020, many people were calling for lengthening cycles, super cycles, all kinds of things. But eventually, we just fell back in the 4-year cycle. And so the 4-year cycle has always remained stable, and it seems that it is doing that now again. And by the way, for the so we mainly talked now about the horizontal alignment, but for the vertical alignment, we can also if we take any arbitrary point, for example, if we would take the COVID crash as a starting point, then you have a significant drop at that time. And so if you then try to compare the percentage gains of each cycle, you get a bit of a skewed result.
Yeah.
And so therefore, I like to use the realized price, so which is the average purchase price of Bitcoin, which are those dotted lines. And you see them for each cycle, they're colored in the same color. So that is the average purchase price of Bitcoin. And I think that's a better tool to use as a vertical alignment, because then it strips away some of that volatility. And so we can also see by using that alignment that we were definitely overvalued due to the ETFs. If we look at this chart, we can see that we're higher above that dotted line than each previous cycle. And that was obviously because we had this catalyst, we had the ETFs. And so now we're kind of falling back into the regular 4-year cycle pattern. And therefore, I think it's not strange to have a longer than usual consolidation.
The Rational Root examines different ways to align Bitcoin's market cycles, from the most optimistic to the most conservative. He mentions that a new all-time high, or ATH, is traditionally followed by a bull market. Historically, reaching an ATH has indeed led to a bull market. However, in 2021, Bitcoin had a muted top due to an ETF catalyst, making the usual cycle alignment less effective. He notes that Bitcoin typically follows a 4-year cycle, and although many expected deviations like supercycles, it tends to revert to this 4-year pattern. The current consolidation period is expected due to the previous ETF-driven overvaluation. The Rational Root suggests that the 4-year cycle remains a reliable pattern, and Bitcoin is likely to follow this cycle moving forward. Now guys, if you're watching this video, you're interested in crypto. If you want to stay up to date on crypto and Bitcoin, subscribe to my daily 5-minute crypto newsletter. It gives the latest expert predictions, any breaking news, and top on-chain analysis all in a nutshell. Click the first link in the description to join over 60,000 others to become a better crypto investor. Anyway guys, that's all for today's video. I hope it brought you some value. I'll see you all in the next one, and as always, all the best.